Welcome to another audit walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over Audit Area 4. This is Section A. This is a remembering and understanding topic. Identify the type of opinion, so that would be unqualified or unmodified, qualified, adverse, or disclaimer of opinion, that an auditor should render on the audit of an issuer or non-issuer's financial statements. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. Again, it is only 1 hour, it is free, and we will teach you the key ingredients to passing the CPA exam in just that 1 hour. So make sure you check that out. After you watch that, you're going to want to learn more. So make sure you also check out becoming a SuperfastCPA Pro member. Pro members get access to the full 10-question versions of these 5-question YouTube videos. So again, we're only going over 5 questions in today's video, but SuperfastCPA Pro members are going to get the 10-question version of the video in the Pro member forum so that they can get a little bit more help and a little bit more understanding. So if you like this, make sure you check out becoming a Pro member. Now with all that, let's dive straight into the questions. All right, here we are at question 1, and one thing that I always like to point out is to read the last sentence of the question first. This is a very good habit, a very good strategy to be in, especially for test day, because frequently it will give you context and kind of an idea for what you are dealing with in the question right from the start. So let's do that right now. Which type of audit opinion should the auditor issue? Again, imagine we were on test day and we saw that last sentence. We immediately know we are dealing with trying to figure out what kind of audit opinion should be issued. That's just awesome to know that right away. Let's go up to the top. An auditor completed an audit of Western Trail Co., a non-issuer. The auditor obtained sufficient appropriate evidence and concluded that the financial statements are presented fairly in all material respects, in accordance with the applicable financial reporting framework. No material misstatements were identified, and there were no scope limitations or departures from GAAP. So again, which type of audit opinion are they going to issue? Are they going to issue A, a qualified opinion, B, an adverse opinion, C, a disclaimer of opinion, or D, an unmodified opinion? Now, if you know anything about the different kinds of opinions, again, we've kind of been hinting at these for the past many videos that I've been working on with audit, and we finally made it to the opinions. If you know what they are, that's great. If not, though, we're going to learn what the different types of opinions there are and learn how to know which one the auditor should use. So if you know the answer, that's great. If not, let's go ahead and take a look at the answer together right now. All right, here we are. The answer is D, unmodified opinion. So that one probably wasn't too difficult to think of, but let's go ahead and go through the explanation. An unmodified opinion, and that would be an unqualified opinion for issuers. So for non-issuers, it's an unmodified opinion, and for issuers, it's an unqualified opinion. And you've probably learned about issuers in other videos for audit, or maybe even for FAR potentially. Anyway, an unmodified opinion is issued when the auditor concludes that the financial statements are presented fairly in all material respects and there are no material misstatements or scope limitations. This is the clean opinion and reflects the best case audit result. So again, unmodified opinion, you might think like it's not modified, that might not be a good thing. Actually, it's the opposite. It means that that's the best opinion, that's the clean opinion that auditors can give. So unmodified / unqualified if it's for an issuer, that is the clean opinion if nothing's wrong, if the financial statements are presented fairly in all material respects in accordance with their applicable framework. So we learned about an unmodified opinion there. Now let's go to the next question. All right, here we are at question 2. Which type of audit opinion should the auditor most likely issue? Again, imagine you were on test day. You know that right away. That's fantastic. During the audit of Conifer Biotech, an issuer, the auditor noted that the company did not follow GAAP in classifying a certain transaction. However, management provided evidence that applying GAAP in this case would have resulted in financial statements that were misleading. The auditor agreed with management's justification and concluded that the overall financial statements were presented fairly. So that's an interesting situation. What type of audit opinion should they have most likely issued? Is it option A, qualified opinion because GAAP was not applied? That kind of sounds like that might be the case. Option B, adverse opinion due to a material departure from GAAP. Option C, unqualified opinion with an explanatory paragraph. Or option D, disclaimer of opinion because the departure could affect users' reliance. So with the little bit that we've learned so far, does it sound like it would be an unqualified opinion based on the first question, or do we think it would be something else? If you know, that's great. If not, let's go ahead and take a look at the explanation together. All right, here we are. The answer is C, unqualified opinion with an explanatory paragraph. So they can give an unqualified opinion in this case because it's an issuer, so it's not an unmodified opinion. So it's kind of an interesting situation. Let's go through the explanation. In rare cases, the auditor may issue an unqualified opinion even when there is a departure from GAAP, if that departure is necessary to prevent the financial statements from being misleading. This is allowed under both PCAOB and AICPA standards, but the auditor must include an explanatory paragraph for issuers or emphasis of matter paragraph for non-issuers to describe the situation. A qualified opinion or adverse opinion would only be appropriate if the departure from GAAP was unjustified or led to materially misstated financials. And one thing I will say is, of course, we test this in the CPA exam and, it makes it kind of seem like it might happen frequently. I'm pretty sure this basically never happens in the real world, but it is something that it is possible, if there's a departure from GAAP, because if it was under GAAP, it would be misleading to the financial statement users, then it can still be an unmodified/unqualified opinion, but that is like super rare, but you do know that now. So let's go ahead and go to the next question. All right, here we are at question 3. Which type of opinion should the auditor issue? Pretty similar question for all of these so far, but let's go up to the top. An auditor is completing the audit of a non-issuer and concludes that the financial statements are fairly presented except for a material overstatement of inventory due to the improper capitalization of certain administrative costs. The misstatement is material but confined to a specific account, and it does not affect multiple elements of the financial statements. So which type of opinion should the auditor issue? This is different than what we've talked about so far. Is it still an unmodified opinion? That was option A. Is it B, qualified opinion? Is it C, adverse opinion? Or is it D, disclaimer of opinion? So they're presented fairly mostly, but there is one material overstatement. So what is this going to be? If you have an idea, that's great. Pause the video. If not, let's go ahead and take a look at the answer together. All right, here we are at the answer B, qualified opinion. So let's go through the explanation. A qualified opinion is issued when there is a material misstatement or a scope limitation, but the issue is not pervasive, meaning that it affects only a specific part of the financial statements rather than the financial statements as a whole. So if something is pervasive, that means it affects the financial statements as a whole. But if it's only affecting one piece of it, then it's not pervasive, and that typically leads to a qualified opinion. In this case, the misstatement is limited to inventory and does not affect the overall integrity of the financials. An adverse opinion would be appropriate only if the misstatement were both material and pervasive, so we learned a little bit about adverse right there as well. A disclaimer applies when the auditor is unable to obtain sufficient appropriate audit evidence and the potential impact is both material and pervasive. So we learned a little bit about adverse and disclaimer of opinion, but mainly the thing we learned is that a qualified opinion is where there is something wrong, but it's not perverse. It's not such a big deal that it's going to affect the entire financial statements. It's just one thing, but because there is one thing that's wrong, they can't give an unqualified opinion, so they have to give a qualified opinion. Now let's go to the next question. All right, here we are at question 4. Which type of audit opinion should the auditor issue? Let's go up to the top. An auditor is completing the audit of Crescent Rail Co., a non-issuer, and discovers that the company failed to consolidate a material subsidiary despite being required to do so under the applicable financial reporting framework. The misstatement affects several major financial statement line items and results in misleading overall financials. So again, which type of audit opinion should the auditor issue? We just barely learned about this a little bit in the third question, so you probably already know the correct answer. Let's go ahead and read through them really quick. Option A, qualified opinion. Option B, adverse opinion. Option C, unmodified opinion. Or option D, disclaimer of opinion. Again, we just kind of went over this a little bit in question 3. So if you have an idea or if you already know the answer, that's great. If not, let's go ahead and take a look at the answer together right now. Okay, here we are. The answer is B, adverse opinion. So let's go through the explanation. An adverse opinion, and again, we kind of just talked about this, is issued when the auditor concludes that the financial statements are materially misstated and the effects are pervasive, meaning the misstatements affect multiple elements or the overall reliability of the financial statements. So it's a big deal. It's kind of throughout the whole financial statements. In this case, failing to consolidate a required subsidiary significantly distorts the financials, making them misleading. So not just one part of the financials, it distorts pretty much all of the financials. A qualified opinion would only be appropriate if the misstatement were material but limited in scope. We just learned about that. A disclaimer relates to inability to obtain evidence, not known misstatements. So disclaimer is a little bit different, and we'll learn about that in the next question. But again, an adverse opinion means that there's material misstatements and they are perverse. They're throughout the entire financial statements instead of just one area. Now let's go to the next question. All right, here we are at question 5, and basically the same question at the very end. Which type of audit opinion should the auditor issue? Let's go to the top. While auditing Sundown Logistics, a non-issuer, the auditor was unable to observe the client's year-end inventory count due to late appointment. The client has no reliable perpetual inventory records, and alternative procedures could not be performed. Inventory represents a significant portion of both total assets and cost of goods sold. The auditor concludes that the inability to obtain evidence is material and pervasive. Have I been saying perverse? I mean pervasive. Anyway, let's go through the options. Option A, disclaimer of opinion. Option B, adverse opinion. Option C, unmodified opinion. Or option D, qualified opinion. So again, I pretty much said this in question 4 that we were going to deal with a disclaimer of opinion. So I'll just kind of give that to you. That's what we're dealing with in this question. So let's go ahead and take a look at the explanation. All right, here we are. The answer is A, disclaimer of opinion. Again, we already knew that. Let's go through the explanation. A disclaimer of opinion is issued when the auditor is unable to obtain sufficient appropriate audit evidence and concludes that the possible effects of the undetected misstatements could be both material and pervasive. In this case, the inability to observe or test inventory affects major components of the financial statements and no alternative procedures were possible. A qualified opinion would only be appropriate if the limitation were material but not pervasive. An adverse opinion applies when there is a known misstatement, not an evidence limitation. So again, disclaimer of opinion, fairly similar to an adverse opinion because it's material and pervasive, but it's because they couldn't get sufficient appropriate evidence. They just couldn't figure out certain things, and it's a big deal because it could be really bad for the financials, but they don't know for sure because they weren't able to get appropriate evidence. That's a disclaimer of opinion compared to an adverse opinion. They know that there is a misstatement and they know it's pervasive and material. So we learned a lot about the different kinds of opinions that auditors can give: unqualified/unmodified, disclaimer of opinion, adverse opinion, or qualified opinion. And we did that all in just 5 questions. Now, before we do anything else, let's do one more part of the SuperFast CPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up. You've seen 2 or 3 or 4 questions trying to teach you what an unmodified opinion is, or how to see if there's a qualified opinion, or, whatever the case is. You notice these things popping up in the questions as you go through them. And so you write these things that you notice, these things that you learn in your own words as the most important things you learned from the questions. And as you're doing this each day, you are building your own personal repository of the most important things you learned from the questions in your own words so that you are prepared for the exam. So let's go ahead and take a look at the pillar topics for this video. All right, here we are at the pillar topics. Let's just go through these. We're going to kind of just go through it, each opinion one at a time. First, unmodified/unqualified opinions. An auditor issues an unmodified opinion for a non-issuer and an unqualified opinion for an issuer when the financial statements are presented fairly and no material misstatements or scope limitations exist. These are considered clean audit opinions. So the best audit opinion is unmodified/unqualified. Now let's talk a little bit more about that. GAAP departure may still result in a clean opinion very rarely. A departure from GAAP can still result in an unmodified or unqualified opinion if the departure is necessary to prevent the financial statements from being misleading. In such cases, the auditor includes an explanatory or emphasis of matter paragraph. Now, I just want to say one more time, this is extremely rare. It's not really that common in day-to-day life. Again, it is something that they want you to know for the CPA exam, that this is something that is possible to happen. Now let's talk about qualified opinions. A qualified opinion is issued when a misstatement or scope limitation is material but not pervasive. This means the issue is significant but confined to specific areas of the financial statements. Now let's talk about adverse opinions. An adverse opinion is appropriate when the financial statements are materially misstated and pervasive, making them misleading as a whole, not just one part of them misleading. This reflects a serious failure to comply with the applicable financial reporting framework. So adverse opinion, really big deal. In fact, probably the worst one, but a disclaimer of opinion isn't too far behind. A disclaimer of opinion is issued when the auditor cannot obtain sufficient appropriate audit evidence and the potential effects are material and pervasive. This usually results from severe scope limitations, including those imposed by management. So disclaimer of opinion, similar to adverse opinions, but it's instead based on them not being able to obtain sufficient appropriate evidence because of scope limitations, whereas adverse opinions are from, it's a known error, it's a huge error that is pervasive throughout the whole financial statements, so that's an adverse opinion. And with that, we learned a lot about the different types of opinions that an auditor can give for an audit, and that is it for the YouTube version of the video. Remember, we only went over 5 questions and the pillar topics, but SuperFast CPA Pro members are going to get access to the full 10-question version of the video, so they're going to get another 5 questions after I finish this part. So if you like this and you like our other products, make sure you check out becoming a SuperFast CPA Pro member to get access to a lot of great stuff. And the easiest way to learn about and to become a SuperFast CPA Pro member is actually by first going to SuperfastCPA.com and signing up for our free 1-hour webinar training. When you watch that 1-hour webinar training, you're going to learn a lot more about SuperFast CPA and our strategies, and you will then have a much better path to becoming a SuperFast CPA Pro member and learning more about that. So make sure you check out the webinar, check out becoming a SuperFast CPA Pro member. If you liked the video, make sure to like it and leave a comment. I hope this was helpful, and I will see you in the next video.